Boy, that time flies when you're having fun, doesn't it? Time to get back here to work tonight, Tuesday evening, June 23rd, 2020. My name is Joseph, as always, and welcome back to your nightly newsletter. Now, if you're here for the first time tonight, it's great to have you with me, because my job tonight is to help us find the best entry setups for tomorrow. That's Wednesday's trading session, and I got a great video in store for you tonight. The charts are already in the background. As you can see, we got some oil, we got the Eminis, and of course, we got that yellow metal, those gold futures on the newsletter tonight. Got a lot to talk about, watching a bunch of reliable setups for tomorrow for Wednesday's trading session. Before we jump in and get our hands dirty tonight on this video, though, I just want to remind you, if you haven't done so already, make sure you subscribe to this YouTube channel. I don't want you to miss all the good stuff we publish every evening on this video. And don't forget, if you have any questions about anything we cover in tonight's video, drop those questions in the comment section below. And as always, if you tune in every evening, man, I really appreciate you guys tuning in every evening and watching this video. If you're like me and you rely on this newsletter prep to get your mind right and get your charts right for tomorrow, hit that thumbs up button for me. Always appreciate you guys supporting this channel by subscribing. Drop those questions in if you got any questions. Hit that thumbs up button for me, guys, if you enjoy the video here tonight. But enough of the introduction. Let's get this party rolling here tonight. Got a jam-packed video in store for you, but I want to kick off the session by looking at the calendar for tomorrow. Courtesy of Econo Day, let's take a look at the economic news calendar for tomorrow. Tomorrow's hump day. It's Wednesday, June the 24th. What do we have here on the schedule for tomorrow? Well, as you can see, there's really one big news event tomorrow, and that is the weekly inventory report at 10:30 Eastern time. Really, it's all about oil tomorrow morning, and anytime I have that 10:30 news report on Wednesdays, I always know the best setups on oil are probably going to be before 10 a.m. tomorrow morning. So you definitely want to get to your desk as early as you can tomorrow morning if you're an oil trader like we are in our trade room. Because after 10 o'clock, things start slowing down, people start peeling out of positions, and price action gets a lot less reliable as we go into that 10 o'clock hour here. Now, about 10 minutes after that number comes out, about 10:40 a.m., we can then get back on the horse and start riding again after that news number comes out. So tomorrow morning, right, that 10:30 Eastern time is the big news for tomorrow. And again, anything after 10 o'clock Eastern time on oil tomorrow is going to be less than desirable. So get to that desk early tomorrow if you're an oil trader like we are in our trade room. Other than that, though, that's not a lot of news, as you can see here on the schedule for tomorrow. Later on this week, as we go into the rest of the week, get a lot of news on Thursday, some big news coming on Friday. And don't forget, as I mentioned in last night's newsletter, these next couple days, probably not tomorrow, but Thursday and Friday, we're going to start to feel that sense of scarcity that happens, that increase in volatility as we go into the end of this month, right? Next week, we have a couple days left in the month. I would expect Thursday and Friday to see an uptick in volatility. But for tomorrow, though, it should be a relatively smooth sailing day tomorrow, unless, of course, you're trading oil around that inventory report. So get there early, get out of there early on oil, and don't forget, guys, we'll be getting together every morning, 8 o'clock Eastern time, trading this stuff together. I'd love to have you with me tomorrow morning at 8 o'clock Eastern time. I'll put all of the registration information for tomorrow morning's trade room. I'll put that all in the description of this YouTube video. So, of course, we'll prep the charts here for tomorrow. Make sure you grab that link in the description and get registered for tomorrow morning's trading session. 10 o'clock Eastern time, though, that's my cutoff on oil tomorrow. Everything else is pretty much wide open here. Now, look in the calendar here. Let's grab some charts here as we go into this video here tonight. What do we got going on? We got the Emini, we got the oil, and of course we got the gold on the docket here tonight. Let's start off first on that Emini S&P futures here. Boy, what a busy day today, right, on the S&P. What do we know about the S&P right now? We know basically the bulls had everything under control. They had a little flash crash at the beginning of the session, right? Bears try once, bears try twice, and and ripping back higher here. But you'll notice, though, what happened, right? They had that strong move up. They got that pullback, and look what they didn't do. They weren't able to retest that high. That, to me, is probably the biggest clue on this chart. We definitely have the bulls well in control right now, but now look what's happening now. Now we have this momentum now building as the market runs lower here. I'll tell you right now, that weekend gap has a big bullseye on it for all of those bears in the market. This is one of those scenarios, though, where it looks just like the buyers, right? They gave it a good old shot and they just failed. And now as that momentum comes tumbling lower here, again, I would still say it's probably just barely still a bull market. But usually, whenever you have an environment where the market goes up and fails, and starts rolling lower like this, a lot of times buyers will try to buy off these support levels, but I'll bet sellers are going to be waiting to get short up around some of these key levels of resistance. So I definitely still think this is just a little bit bullish here right now, but I think all that momentum coming off this high right now definitely gives all those bears that edge that we need to make a profit here tomorrow. So if I had it my way right now, what would my favorite trade be? My favorite trade tomorrow, if I had it my way, would easily be getting short up around the top of this hidden channel I've drawn in. We know we have that bear momentum on our side. We know we have that expanding triangle. I'm hoping that buyers will try to buy buy that support level, get us up off of these lows here, and I'm hoping that I can get into a buyer failure pattern up around those highs, waiting for buyers to try to buy that next pullback and selling right into their stop losses. That would be my kind of home run scenario here for tomorrow. So again, with the bulls overall in control, I like the idea of buying in a bull market, but you see how they're rotating off that high? That's a lot of momentum right now for those bears. So my goal would be let these buyers come in, get them to try to take the bait and buy off of that kind of expanding triangle, if you will. Usually these will be these big triangles here, but again, they couldn't get that retest of the high. So I want to make sure I'm using a level of resistance on this, right? I'm hoping buyers will buy it. I'm hoping that we can get this thing to pop up inside the battle zone, get above some of these levels of resistance, get these buyers to come in and try to buy that pullback so I can then look to sell into those stop losses as we go back lower. Now, another possibility here is we may see another one of those shocks to the system like we saw in last night's newsletter, right? Or we saw early in today's trading session. So you'll notice I've got this trend line drawn down overhead, right? That kind of completes the top of that battle zone. If I can get this pop, if I can get it to really pop higher here, I still want to try to be a seller on this, but now I've got to respect the buyers and their momentum. So my dream come true, kind of my dream scenario would be we go up just a little bit above that 24, right, 25 high there, get that momentum coming over, buyers try to buy it, and I'm selling into their stops with a failure pattern? Or do we see a much stronger pullback, right? In this case now, that trend line is still there. There is not a very easy way for these buyers to buy that next pullback. What I'd like to do is because that momentum will be so strong for the bulls, I'll look for what I call a nested failure. Let the buyers try once, let those buyers try twice, and just sell from there. So a very subtle difference there. It all has to do with the strength of that pullback. If I can get a really strong pullback, again, the buyers do still have that little bit of trend, right, on their side right now. And so if it does really spike up and we run into that overhead trend line, I'm going to flip it into a nested failure instead. Now, there's also a chance here, too, the market may tumble, right? There's obviously a very big, wide open space here below us. And again, I would imagine there's a big bullseye on that weekend gap, then around 30.57 for tomorrow. I know how I want to trade this if it pops up off of this low. What I'm thinking, though, is what if this market starts to tumble, right? What if it starts to tumble? If it really starts to tumble, what I'll look to do is, there's two basic patterns to look for as the market starts to tumble lower. The first one would be, if we start to roll lower, I'm going to find that next channel and look to basically just steepen, right, the slope of that channel, and look for the same, basically a buyer failure pattern off the high of that hidden channel. I'm also watching for, if the market really starts to push here, I'll look for what I call a two-try trap pattern, a strong move down, a shallow pullback with a lower low in price. Strong move down, shallow pullback, lower low in price. I'm looking for a trap high on this. And of course, what I always like to do on these patterns is try to find another level of resistance to combine along with it. So those are my key setups here to get short on this S&P. Again, I would imagine buyers will try to buy on this pullback. Can I get that buyer failure and run it back down? Do I get that big jump and get that nested failure and back down? Or do we get this strong move that continues, and now I'll extend out my hidden channel, look for that hidden channel pullback off the high of the channel? Or do we get that two-try trap pattern, that strong move down, that shallow pullback, that lower low, and of course that trap high? All four of these setups really all going with, right, the bulls, or going with the bears, right, in this case. Now, how could I buy this market? How on earth, right, could I get long, right, in this situation right now? I'll tell you that really the only way to get long on this, because they've got that trend line, right, coming down here, the only real reliable way to get long on this is to get some proof that these buyers do have control here. I really don't want to try to pick a bottom on this, because I just think you're going to see a lot of sellers coming in overhead and trying to catch them, right? I would imagine there's a lot of bears waiting just above that 24.96. So I was tempted to talk about a crown reversal pattern. Crown reversal would be a decent opportunity here, but again, with that momentum rotating off the high, with that trap above 25, just waiting, just asking for trouble, I don't exactly think that's going to be a very reliable setup, right, to look for that classic, we call it crown reversal, which is basically a nested failure with a trap entry. I don't think that's going to be the most reliable trade on this one right now, just because of what the situation is. So really the only way I can trust these buyers is if I can get a strong move higher, and then show me you mean it, right? Show me you can actually hold that pullback and blast through those highs. Now I'm going to draw up a new channel, mark up the high first, find that hidden channel off the low, and then I can look to buy that first pullback. That's always the key. The first pullback after what I call a 1, 2, 3 reversal, right? So 1 is a strong move up. 2 is a pullback to the moving average. 3 is that strong move up off the EMA. And then again, looking to buy that first test of that hidden channel pullback. That's the only real reliable long setup that I can really see right now. Now, at the same time though, you'll notice I did mark up this range in this chart, right? There is a bit of a range on here, and that would be the other scenario to watch here to be a buyer. You know, let's just say, for example, we run back up and we get stuck inside the range for a while. If we were to get stuck back inside that range here for, you know, a couple hours here overnight, at that point now, I could definitely justify having the sellers be absorbed and start looking for what I call a failure pattern here, a seller failure pattern right below the low of that trading range. So trying to catch those bears on the wrong side of the market. Again, this is all prerequisite. It's got to get stuck inside that range there for a considerable amount of time here in the overnight in order for me to even consider being a buyer below that trading range. So hopefully by now you've got a pretty good idea of what my favorite setups are going to be. I hope we get that failure pattern, either the buyer failure or the nested failure off of that high. And don't forget, guys, if you're here for the first time tonight, I cover all of these patterns in that free trading course I have linked up in the upper right-hand corner. You'll see a little button that pops up there in the upper right-hand corner. Grab that link and get registered for our free trading classes, and you'll learn all about these traps, these failure patterns, 1, 2, 3 reversals. You'll learn all the details of this trading strategy in that free trading class. And again, as I mentioned mentioned earlier, I'll put all of the most important links for you guys, all the membership links for tomorrow morning's trade room. Also, I'll put the free course links in the description of this YouTube video. If you're on the blog right now at Sideways Markets, I'll put a big button for you right below the video tonight on that trading blog. So no matter what, come out and join me tomorrow morning, 8 o'clock Eastern time. If not, make sure you grab that free trading course so you can learn more about how we do it here at School of Trade. All right, let's keep going. S&P is looking pretty good. It's a little bit confusing because it is looking very bullish right now. But again, all that momentum is really going to weigh down this market right now. Okay, S&P is looking pretty good here for tomorrow. How about the oil? Now, the oil is definitely where I would anticipate the S&P wants to go, right? So look at what's happening on the oil. This is very similar to what I think we may see here tomorrow on the S&P 500. What do we know about the oil market tonight? We know that, much like the S&P, they had that big kind of flash crash. The buyers bought it up. They ran it all the way back up, and look what happens. They got the pullback. They tried to retest the high, and they failed. Now, whenever I see a failure like this, I call this a 1, 2, 3 reversal. As I mentioned before, 1, 2, 3, 1 strong move down, 2 pull back to the moving average, and 3 is that strong move lower. Once I see a 1, 2, 3 reversal, I know the bears have control, and I know that I want to sell at resistance. My favorite levels of resistance in these 1, 2, 3 reversal scenarios is to draw off of those lows, bring it up around those highs, and look to sell short at the top of that channel. That's really what my home run setup would be here for tomorrow. We know we're bearish. We know we're trending. We know we want to sell at a level of resistance. And so I've got a couple levels marked up here, right? I got my battle zone number 1, that 40.60 to 40.50 area, and I've got the battle zone number 2 a little bit higher up. Now, if you want to know the dream come true scenario for tomorrow, is the dream come true scenario would be a move back up to 40.80, right? Get all the way back up, because there I can risk small to earn large. I got trend lines coming down, channel lines overhead. That would really be that battle zone number 2 up there around that 41 to 40.80 area. That would definitely be what I would really love to get here on the oil. So let's talk about these real quickly here. How could I trade these for tomorrow? We know we're bearish. We want to sell at resistance. So one pullback here. We have this channel, right, into channel. So this area right there is a great spot to sell short. It's not the ideal pullback. What I'm looking for here, though, is if I can get this pop up here, right? If I can get this price to pull back right now, I've got a perfect opportunity now. Get the moving average coming over, buyers coming in to buy the pullback, right? I'm looking to sell into those stops, selling the pullback to the moving average, and finishing off that move as we go. A buyer failure pattern into a bear pullback pattern for a retest of that low. And like I mentioned on the S&P, you have to think there's a big bullseye down there at 39.50. That's the weekend gap. As I mentioned in last night's newsletter, the closing price from Friday, that will likely be a magnet here for those sellers for tomorrow. So that's the first one, right? Shallow pullback up inside sell zone or battle zone number 1. Moving average comes over. Buyers come in and try to buy the pullback. I'm simply now looking to sell into stops, selling pullbacks to the moving average on the way down. Now, what if we get that deeper pullback, right? That deeper pullback. Now, these deeper pullbacks, they usually come in one of two ways. And again, I've got kind of a range up there. I really like that whole area up there. But as you can imagine, that's going to be a really strong pullback, and the buyers are probably not going to give up without a fight. Now, the most reliable setup I'm going to use is that nested failure. So as we pop higher here, now those buyers, they'll be beating their chest, they'll be flexing their muscles, right? They're going to feel very much in control on that deep pullback. So instead of getting aggressive and simply selling into stops, right, of those buyers, I'm going to play that nested failure game, right? Let them try once, let them try twice. And my favorite way to do this is to draw a trend line over those highs and use that trend line as my key level of resistance, right? I'm always trying to sell at a resistance level. And so that's definitely going to be a great opportunity here if we get that real strong push right up off of that low. Very reliable setup there. Now, sometimes what happens is you'll see what's called a two-legged pullback. We'll pull back, right, one, and then go up from there. And if that happens now, I'm going to draw a trend line across those lows and then try to use that trend line as a level of resistance. Now, these usually take a little bit longer than I'd like them to take, but these two-legged pullback patterns, right, one leg and two leg, we call these 2LPs. Right, these 2LPs, this two-legged pullback pattern, using that trend line, again, anticipate this ahead of time, but expect to take a little bit longer than you think it will, right? It'll have to go up, one leg, pull back, right, and then get underneath and then use it on the other side of that range. So again, if I had it my way, I'd get that strong move up, buyers try once, buyers try twice on the pullback, and I'm selling into those stop losses, right, around the moving average. Oh, and don't forget, too, I should also mention, since we're talking about it, if we do get that really deep pullback and we get the nested, a lot of times what happens is because the market pulled back so far and it traps in so many buyers, right, on the wrong side of the market, when this thing collapses, it oftentimes really runs. So again, my ideal scenario here would be a nested failure pattern, right? We're selling into stops, and then as we go lower, keep your eyes open for those strong move down, shallow pullback, trap high. That's another one, right? Very common after we get those really deep pullbacks, right? So deep pullback, right? Nested failure pattern into that two-try trap pattern as we start to collapse back down. Where's my target? Target's back down to retest those lows. And if you have an extra contract, you might want to leave an extra bullet in the chamber, right? To leave that gap, right? As that nice big runner on the way down from there. So those are 3, maybe 4 setups there, right? The buyer failure on the shallow pullback into a bear pullback, or, right, that nested failure into that two-try trap pattern as we go. Now, don't forget, guys, I'm just simply drawing this stuff up right now to get my mind right and get my charts right for tomorrow. I cover all of these patterns in a lot more detail in the free trading classes that I mentioned before. So again, grab that information link in the upper right-hand corner, or grab the link and get the registration page for the free trading course down in the description of this YouTube video. Now, another big challenge we have here is what if we keep going lower, right? What if the market keeps on running lower? Now, you'll notice we're running right back into what we have to assume is a big target area for the sellers. I assume that sellers are going to be taking profit down here at some point, right? I would assume, if I can spell here, right? I would assume that sellers will be taking profit here, and because of that, this is really an area where it's very much off limits. So I think the most important thing is going to be, if we do keep rolling lower here, right, I've got really 2 options. One is to continue to wait for that pop into that buyer failure, into that seller pullback. That's the same basic strategy we talked about earlier, or we really have to see it break through these lows. For example, right, if we open up and we blow right through this area, if this thing really takes off the downside, then we know they're probably hunting for that $39 a barrel, right? If you look even further down the line, we have a huge magnet down there, 38.50 here. So I've got a lot of open space below me if I can get this thing to really pick up the momentum as we go. So again, if it just kind of lazily, right, if it just kind of lazy kind of rolls lower here, I'm going to keep my eyes open for those, right, for those pullbacks above those prior swings, get those buyer failures, right? And of course, selling back down again. If those bears, if they make that run, if they really run through this thing, I'm perfectly fine by drawing that channel now. I'll mark up that trend line. I'll find that new channel, right? And sell. Again, you want the first test of that new hidden channel, right? That would effectively be a 1, 2, 3 breakout, or breakdown in this case, into a hidden channel pullback. So definitely keep that in mind as we go lower. A lot of this has to do with kind of how the personality looks as we go lower. And there's also a possibility here as well that as we go lower here, we may end up stalling out around those lows, right, into a range down here. If we see a range, when I see a range, the first thing I think of is breakout failures, right? Wait for the breakout higher. Wait for those breakout pullback buyers to try to buy that pullback and sell into those stop losses. So that's my goal here for tomorrow. Again, I'd love to see that deep pullback to get it. But if the market keeps on grinding lower, right, do we go sideways, sell above the high of the range with a failure pattern? Do we continue to grind lower, wait for the pop and sell into pops? Or do we completely collapse here and find that new hidden channel and sell short from there? Now, how about a buy side on this? How would I buy this market? Well, one thing I'm not going to do is try to buy because we've gone too far, right? That excuse only works when you're a rookie, right? Well, we're almost at the lows now. Now's the time to be a buyer. No, we're way too bearish right now. I cannot justify being a buyer on this until these buyers actually show me that they mean business. So how do we do that? We need that reversal pattern. We need that strong move up. We need that pull back to the moving average and that jump off the moving average. If we don't get that, remember, if all we get is a strong move up, I'm still looking for a buyer failure to sell back down again, right? So remember, a strong pullback is not a reversal. A strong pullback sets the stage for a reversal, but the buyers have to hold. They've got to come off that trend line or off the moving average with some strength here. Once I get those buyers with that 1, 2, 3 reversal, I'm going to mark up that high. I'm going to mark up that hidden channel low. I want that first test, right, of the low of that channel. Where's my target? That's an easy one, right? Back up to retest those highs at 41.63. Now, every once in a while, we get a really strong jump. Wouldn't surprise me. Again, we're going into the end of the month. We got news tomorrow on oil. A lot of stuff going on out there in the world we live in right now. So it wouldn't surprise me to see this thing really jump. If it really jumps, right, if it really pushes off that pullback, keep your eyes open for that shallow pullback, that higher high, and that trap low. This will always be one of the most reliable setups. And again, draw off the trend line off the high, find that hidden channel, buy that low, right? So if it really pops, watch this thing setting up here, right, for that. Again, I call these 2-try trap patterns, right, coming off the low of that channel before we get back up to retest those highs. That looks great here for the oil. So now we know we're staying disciplined to be a buyer on the oil tomorrow. How does this market pull back? Do we go sideways? At the very least, we've got a great plan of attack all put together here on the oil. We're looking good. Let's wrap this session up here tonight over on the gold here, right? We got the S&P all ready to go. We got the oil. Let's wrap things up now on the gold. What do we know about gold here tonight? Boy, gold's a pretty easy one. We know we're bullish. I think that's pretty obvious right now. I think they said it was 8-year highs, new 8-year highs on the gold here. Not a huge surprise. We heard from the Fed earlier on this month of June. They pretty much guaranteed to be buying more, buying more equities, buying more bonds, buying more bad debt. So it's not a big surprise to see the gold pushing higher here tonight. So we know we're bullish. I want to be a buyer at a support level, right, in a bull market. And really, there are 3 main components on this chart. Maybe 4. Let's go with 4 main components here. The first one, which I think is the most important one, let me get rid of this here real quickly, is this spike in channel. I think this is the most important component on this chart right now. That's the first thing that you want to think of. So what does a spike in channel tell me to do? It tells me to go back to the base of that channel and buy the base of that channel. Okay, so whenever I see a spike in channel, I always know to go back and look at the base of that channel and look to buy that pullback from there. At the same time, that also leads me to think, well, boy, that reversal line up there will be a really good level of support, right? That's the second piece of this puzzle. Now, I also want to keep in mind, too, if I draw a trend line off of those highs, right? If I draw from this high to this high and get that trend line off those highs, look at how well that thing fits off of that low. That's another component that I'm watching for here on the gold, right? Maybe we get another big shock like we saw in the overnight today, and we get that nice big drop right off the high. That is something I'm watching closely. And then last but not least, kind of the fourth piece of this puzzle is this range. It doesn't really look like a range yet. It kind of has the feeling of a range to it, but I would say that's something to keep our eyes on for tomorrow as well. And so what if I had my way, right? What's my dream come true pattern here? Well, really, I've got two of them, really. I'd like to get a pullback down to that 75 area. My home run scenario here would be a nice deep pullback, not too deep, right, but down into that first stage of the battle zone here. Get that moving average coming over, get those sellers to confuse this as a reversal. Once they do, I know exactly now where those stops are. I can buy into stop losses, I can buy the pullback off the moving average, and my target, of course, is back up to retest the high. That would be a seller failure pattern into a bullish pullback pattern and a target back up to retest the high. Now, what if we go deeper though, right? What if we end up going all the way down, right, down to that channel low that I mentioned, right, in the introduction here? With that channel low now, what's going to happen? It's going to be very bearish, isn't it? It's not going to be a full reversal yet. We'll talk about reversals here in a moment. But at this point now that momentum is way too strong. So now, how do I buy when I'm worried about the sellers, right, having control of this market? I'm going to use that nested failure pattern. Remember that from earlier, right? Let the bears try once. Let the bears try twice. I always like to grab those trend lines off of those lows, get those bears to try once, right? Get them to try twice, 1 and 2. Nice strong signal, buying right into those stop losses for that rally going back up to retest the high. And again, don't forget, a lot of times when you get these really deep pullbacks like this, when these bears, when they fail, 1 try, and 2 try, when they fail, this thing almost always races higher here. Keep your eyes open now for that shallow pullback, that higher high, and that trap low. We call these 2 try trap patterns, right? Now again, draw the trend line off those 2 lows. Nice strong signal candle, right, for that nested failure pattern. Then don't forget to mark up those trend lines, right, and find that hidden channel and grab it again before you retest the high of that trading range. That'd be a nested failure into a 2 try trap pattern, right? Those are a couple setups I'm watching for as we pull back. I think the hardest part tomorrow is going to be, right, if the market keeps going higher, right? If the market keeps going higher here without a pullback. But first, let's talk about a range here, right? So what if this range is correct, right? What if we do end up settling in here into that trading range? We spend the next couple hours going sideways. Does anything change? Not really. Not a lot changes. What I will do though is really keep my eyes on that 75 area. That 75 area is a very nice level there because of 2 things. First of all, there's that prior swing about 76, and you've got that reversal line there. So that's that little spot right there between those 2 levels. I can almost guarantee you this thing goes sideways here. A whole lot of buyers are waiting right between that 76 and that 75 even area. So if we do go sideways here, we start seeing those double tops, double bottoms, right? Moving average flattens out. What do? We wait for a breakout and we fade the breakouts, right? Whenever I say range, you think breakout failure. Because what is a range? A range is a magnet. And so if we can get that breakout, right, to move lower, right, once the buyers run out of bullets, as we say, right, now let those bears, let them try to get short off the next pullback. You know you're right at that level of support. I've got my reversal line support. I've got channel support. I've got swing low support. What a beautiful spot there to be a buyer. And again, this will be a failure pattern, right? Failure patterns are my go-to patterns whenever I have a trading range environment. And don't forget, you'll see lots of examples of these failures, reversals inside that free course I mentioned. There's a link for you guys details in the upper right-hand corner of this video. Now, let's talk about going higher here. That's one of the harder parts here right now. First of all, if we do break out higher, where do we think it's trying to go? That 1798 to 1800, right? That is probably where that next big bullseye will be for those buyers. So what are some options for me if the market tries to go higher? Well, the easiest one is going to be that jump up, that pullback, and that jump off the moving average. What's that called again? It's called a 1, 2, 3 breakout. In this case, breaking above the top of the range. I'm not going to try to buy that first pullback. Those pullbacks that are late in these moves like this, they're not going to be very reliable. They oftentimes end up like that, right? Well, they'll go up, they'll pull back, and they'll kind of fall flat on you, right, on that first pullback. I'm not going to try to trade that first breakout pullback. I'm going to mark up that 1, 2, 3 breakout. I'll mark up that high, I'll mark up that low, and I'm buying, of course, right, the low of that hidden channel. 1, 2, 3 breakout into hidden channel pullback. And again, you want that first test of that channel. Now, let's say things get crazy and the market really jumps. If it really jumps, watch that 2-try trap pattern. Shallow pullback, higher high in price, trap, 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 right? Trap low. That'll be a beautiful setup if we can get that strong move up, that shallow pullback, that higher high, and that trap low. Now, we may also see this market 1, 2, 3 breakout and run all the way up quickly, right, into that 1800. If we find ourselves pinned higher here and going sideways, what do? We look for failures. We wait for that price to pull back. We wait for those bears to get caught trying to reverse to force the reversal, and we buy right into their stops. It's nothing but bullish. And so once it goes sideways, just wait for that pullback and just wait for those bears to commit to the pullback and buy right into those stops when they fail. Very, very easy pattern. It just takes some patience to wait for the proper setup. Now, the one thing we haven't talked about here tonight is a reversal on this gold. What would my favorite sell setup, right? How would I short this gold market? Well, again, as I mentioned earlier, the Federal Reserve Bank here is pretty much committed to, right, putting free money or easy money into the marketplace right now. That's why gold is so bullish here, right? It has a negative correlation to the US dollar, right? So as they devalue the dollar, right, they keep printing more money at the Federal Reserve Bank. The price of gold keeps going higher here because as the value of the dollar goes down, right, gold has that kind of fundamental negative correlation. So what that means is I've really got to be careful trying to pick a top on this gold right now. Technically we're bullish, and really fundamentally we are bullish right now because of the comments from the Fed. So knowing that, again, if I get that pullback right now, there's no way I can sell that first pullback, right? I'm looking to buy into those stops. Even if we get that deeper pullback right now, 1 and 2, and buy back up. But if I can get that strong move down and I can get down inside that buy zone and see these bears come in and trigger off the moving average, what do we call that? We call it a 1, 2, 3 reversal. Strong move down, that sets the table. It doesn't necessarily guarantee the reversal though. Wait for that pullback to the moving average and show me you mean it, right? Show me you mean it for the sellers coming off that moving average. Then once I have that 1, 2, 3 reversal, now I'm going to go out, I'm going to mark up those lows. I'm going to mark up those highs, find that hidden channel, and we're looking to get short off the high of that hidden channel. Now, obviously at this point now, the sellers are going to be hunting for that low of day. But more importantly though, if the bears, if they can possibly grab control of this market, it seems unlikely right now, but if the bears can take control of this market, that weekend gap, which I know has been on everyone's plate, right, this week here, that weekend gap at 56 is a pretty easy bullseye, right, for those bears. So now I think we got a pretty good plan here for the gold, right? I want to buy that deep pullback on the gold with some seller failure patterns. I would love to get that 75.1 area deep pullback, right, to buy it. I think the hardest part is going to be if the market keeps going higher here. And I should also mention too, right, if we keep grinding higher, let's just say, for example, we keep grinding higher here, not a lot changes, right? Not a lot changes. It's still a spiking channel. We're still going to wait for that deep pullback. We're still going to wait for those bears to try to force that reversal, and we're going to buy right into their stops tomorrow morning, right, in the trade room. So that's still the goal. But again, if they really push, that's where that 1, 2, 3 breakout pattern or that 2-try trap pattern will really come in handy as we go higher. So gold is bullish, trying to buy a pullback here on the gold here, right? The oil is bearish. Got a couple spots we're watching for to get short on the oil. And then, of course, right, you got the S&P. The S&P, this should be an interesting session on the S&P in the overnight because, again, we are still very much bullish right now on this S&P. But, again, when the market rolls up and then rolls all the way back down like that, there's usually going to be a hell of a lot of bears waiting to hit it when it goes back up to retest the high of that hidden channel. Should be a very interesting and exciting session for tomorrow. And don't forget, tomorrow morning, 8 o'clock Eastern time, we're going to get together and we're going to execute this plan together. I would love to have you with me there at 8 a.m. Eastern time at the opening bell. Don't forget, I'll put all of the trade room information, all the membership information, and a link to join our free trading classes. I'll put all the information for you guys down in the description of this YouTube video. If you're on the blog right now at Sideways Markets, I'll put a big button for you right below me tonight on this trading blog. And don't forget, guys, you can always call me. I'll be here in the office all evening here tonight. Don't be afraid to call that toll-free phone number or use email or Skype. And then if the phone isn't a good option for you, grab that live support tool on the right-hand side. I'll be happy to answer all your questions using live support. Whatever you do, though, don't miss tomorrow morning's trading session. I will see you guys at 8 o'clock Eastern time. If not, come back and see us again tomorrow night. Got another very big newsletter coming tomorrow night as we go into the end of the month and the end of the week. This week is just getting warmed up. I am stoked for tomorrow. Hope I'll see you there with me. If not, come back and see us again tomorrow night on the next edition of our nightly newsletter. My name is Joseph. As always, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.